What's going on, you filthy bastards? Gabe here with ReviewDork, and we have another day trading video. Make sure you guys like, share, subscribe, leave a comment down below, and even for some seasoned investors, consider this video a brush up. Stop losses. Hard stop losses. This will save your rear. How many times you go ahead, you enter a trade, and it doesn't go as planned, and so what do? You put good money after bad, buying the dip, hoping that the stock is going to run up, and then it doesn't. So we have Naked Brand here. Now, why do we have Naked Brand here? Well, it's a highly volatile stock, which I like. 119 million on the volume. Also, it's crossed every single important indicator, meaning the 50-day moving average, the 200-day moving average, and the VWAP. Now, we have to create a thesis for this equity, and obviously the thesis is, I want to make money, don't you? Knowing when to enter, and we talked about that in our previous video. I'll include a link down in the description, but we could see in intraday that the stock was consolidating. So my thesis would be, is it going to go up? I would enter a trade here at or about 71 cents. What we want to do is open up a position size calculator, and we give it all the parameters, and it tells you how to size your entry. So assuming you have $25,000 in your account, you are now a pattern day trader, and you want to enter and exit this position. What we do is we set our entry price. Our entry price here is about 71 cents, but the equity has shown us that we could dip as far as 69 cents on the day. So that is where we're going to put our stop loss because we don't want to go down. We then go ahead and enter 69 cents as our initial protective stop. We click compute, and it tells us we can buy 12,500 shares. The position size would be 8,875. We are risking 2 cents, and the risk position in total would be $250. That is 1% of the $25,000 portfolio. So we enter in this area here, and we see that it actually bounces up. This is a winning bet. What you have done is you risked 1%, but you got 2.5% return. Again, a lot of beginning day traders like to average down so that they can make more profit and or exit early. I say, no, don't do that. You're setting up your account to get blown up. After all, according to the position size calculator, we've already dumped $8,000 or at or about 33% of our total portfolio size, but we are protecting it with a hard stop loss. If it goes down to 69 cents, you only lost $250, but this would be an ideal play here. Enter at 71 cents, and then you go ahead and ride the wave up to 74 cents. And that is the name of the game with trading on the stock market. Now, what happens? You exit your position. The day is not over because the equity retraces and it falls back down to the 200-day moving average. This is telling me that my entry is 72 cents. If I'm wrong, I protect it with the same stop loss. So we go back to the calculator here and we change the 71 cents to 72 cents and we compute. Now we could only purchase 8,333 shares with a stop loss set at 69 cents. And again, if we're wrong, we only lose $250. But if we look at the chart, we're right and we're gaining nearly $500 as we hit 76 cents. So this is how you play it. You plan for the worst, you hope for the best. It's not plan for the best and hope it doesn't get worse. You always have to protect yourself, guys. And I diligently subscribe to the 1% risk. It is fairly easy to recover from a 1% loss as opposed to a 3%, a 4%, 5%, 10% loss. But I want to show you guys this chart here. If you lose 5%, you have to gain 5.3% to break even. You lose 40%, you need 66.7% to recover. And this is why I don't subscribe to the double down or the average down. I subscribe to a hard stop loss. Now, if we go ahead and look at this chart here, you can see that you probably don't want to risk any more than 5%. 5% is the easiest to recover, at least according to this chart. But again, the least you risk, the easier it is to play, the longer you get to play in the stock market. Guys, the stock market is about a long-term education. You want to make sure that your money lasts as long as possible while you're learning up until the point where you are consistently profitable. You're eventually going to get to a point where winning is not the exception to the rule. It's actually a very common happening. But for beginning traders, you're going to find yourself in the red. You're going to freak out. You're going to get emotional. So save yourself that headache. Discipline yourself. 1% risk, hard stop losses. Use the calculator. I'll keep the link down in the description. In fact, I'll even pin it to the first comment. That's it for you guys. This is Gabe with ReviewDork. I hope you learned something. Peace.